Alright, just take note that this presentation is purely for educational purposes, does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Okay, so moving forward, um, for those who are new to the webinar, I think every week what I'll do is that I use price action to determine what the market is trying to do, whether they're sideways, uptrend, or downtrend. Let me just bring this up. For those of you who have attended webinar many times, please be patient. I just need because I think the price action part in the beginning is very important. So just bear with me because if most clients, I mean, maybe I should start why I'm using price action. Well, for me, price action is a leading indicator. Okay, and basically what I'm trying to do is I'm trying to understand which phase the market is in so that I can identify the right strategies or the right kind of trade plan to apply to the market. So at the end of the day, whether you're looking at daily chart, 5-minute chart, monthly chart, 4-hour chart, different charts can tell you different things. But what you want to see is whether the chart is trending or consolidating. And then from there, once you have a bias, when I say bias means that if it's a downtrend, you're looking to short. In uptrend, you're looking to buy. Consolidation, you're just buying and selling a spot. So if you have a bias, then what you need to do next is just to plan the trade. Okay, so price action is basically identifying swings in the market and labeling them as higher high or higher low, lower high or lower low. So if I give you an example, so you can see that this is a very nice uptrend. All right, so some of you might ask, what is a swing? Okay, a swing is basically, for me, it's like a concave or convex point in a chart whereby it coincides with support and resistance. Okay, so if you look at this particular, let me see what I have it here. So look at, see all the circles here? So swings are formed at major turning points in the market. It's usually around support and resistance levels, and the number of candles can be 3 or can be 4 or 5, depends on how it looks like. It's always better to coincide with a level of support and resistance so that there's a high probability that that level is significant. Just like this level here, see this red line here? This is 16750, I think. You can see resistance, and then became support here. So every time when the price hits this level and it forms some kind of a swing, all right, this can be considered a key level as well. Okay, just a bit of theory. And basically how I plan the trade is I use this process. This is something I created on my own. I establish the bias, whether it's bullish or bearish. Okay, normally based on a high term time frame like a daily chart and an 8-hour chart. I plan the trade. Once I know the bias, I plan the trade. And when I plan the trade, I try not to change the bias unless there's something that changed fundamentally because of news or mostly because of news. So unless there's a big change the bias, then I'll just stick to it. I'll plan the trade, and this way I stack my odds. And I use multiple level of tools like chart patterns, indicators, support and resistance, multiple time frames to stack the odds for me. All right, basically, and then I plan the risk to reward. And after that, just trade management. Okay, so basically, this 3 trading process is what I do normally to determine what the market is trying to do, plan the trade, and manage my psychology. Very, very important for me. And when it comes to price action, in terms of how to enter and how to exit, I use this little I call cheat sheet to guide myself. So for example, if the market is making a new higher high, all right, then I'll look for longs. If the market is make a new lower low, I'll look for shorts. Yep. If you guys are not familiar with price action, now there's a lot of good material online. This webinar is more towards live analysis, so but if you want more theory, yeah, feel free to drop me an email, or if not, there are a lot of good online resources that you can look up for. Okay, so moving on, I always cross-reference back to this theory when I'm talking about live markets. Yeah, so moving on, let's start with indices. So let me show you Wall Street, S&P. Let's start S&P. Okay, so if you look at the S&P 500 weekly chart, all right, it's still bullish. It's just that right now it's the momentum is a bit waning. You can see that it made a higher high. It is a higher high here. Okay, so it did make a higher high here compared to this high. It did make a higher low here compared to this low. But notice that for the past few days, it does not, on the past week or so, it did not make a new high high. In fact, there's a bit of resistance. You can see that resistance forming here. And this area here, okay, let me take away all the drawings first. Okay, and this area here, compared to this high here, it's considered lower high. Lower high can mean two things. It can either mean a consolidation is coming up, or it can mean that the market is turning around to the downside. Okay, so for example, when you have an uptrend, okay, you see a series of higher highs here, a series of higher lows here, another new high here. But once it makes a lower high, which is this, it's either is going to consolidate somewhere here, or let me draw an example. Yeah, it's another lower high here. So it's either going to consolidate or it's going to reverse to the downside. So this is scenario A. This is scenario B. Alright, so a lower high is quite significant. So just a heads up on this on the weekly chart. So the uptrend momentum is not there anymore. Alright. Now, so weekly chart is still bullish. It's just that the uptrend this is not bearish yet. It's not bearish until it makes a lower low. So this is still bullish, but just that the momentum is waning. Okay. Looking at the daily chart, you can see that it's a bit more consolidating. Previous 2 weeks, when we were in the webinar, I had this drawn. It's a bit of consolidation. So, I mean, if you are trading a breakout of a price pattern, a chart pattern, you could have taken a breakout to the downside here when you book the support at 2140. Okay, and then maybe trade down the next level. I think I did cover this trade in webinar as well. Okay, this is not really my cup of tea because I like to trade when the daily 4 hours trending nicely. Okay, but for this case, it's just a small breakout to the downside. Not surprisingly, it bounced back off support. So on the daily kind of time frame, right, you can see the market is consolidating between the 2120 support level and around the 2180 resistance level. Alright, another level that you need to look out for is 2140 or so. Alright, but it's just one big consolidation. Key thing to take note, I'm very keen to see what happens near the 2120. Anywhere between 2100 to 2120. Because if you see this level here, you can see resistance, support. So the market breaks this level, right? High chance we might go to around the 2000 area. Okay, so pay attention around these levels here. Now, let me go to the 4 hour chart. So daily is a bit more consolidation. 4 hour has not much direction as well. Okay, so obviously where was the triangle breakout? So for those of you, this is more of like intraday kind of setup, yeah. Where the triangle breakout happened here. See, it broke downwards here, and then pull back. Okay, this is a possible area where you could have taken a shot, and your target was a support somewhere here. Of course, on hindsight, it's easy. Okay, but this is what happened. It broke out, pulled back, short, came down. Okay, but this setup is over already. So right now what it's trying to do is that it's bouncing off the support and going back to resistance. My preference is not to touch the S&P right now because it's just going through a consolidation phase. The 4 hour chart has not much direction. Yeah, exactly, John. Hindsight trading, everyone be rich. It's true. But I mean, if you hindsight is always very easy, okay? But if you like to trade such chart patterns, right? Okay, you can use this particular drawing that I have. So for the S&P, the breakout to the downside was something like this one. So basically, you wait for breakout downside, pull back, short, and come down. All right. So I mentioned that 2 weeks ago regarding this little triangle consolidation. It has already happened. All right. There's nothing to chase. There's nothing to chase now. But right now, I prefer to let it wait and see what happens. It might come back down to 2120 and consolidate a bit more. Okay. But basically, it's trapped in this range of about 60-point range, 2120 to 2180. I prefer to trade a trend. So I'm more keen to pay attention what happens around the 2120 level. If it breaks downwards, I'm happy to take a shot to the downside, maybe target the next level support around the 2080 level also. Okay, but right now it's just this big consolidation. Alright, that's the S&P. The other US indices look pretty much similar. Okay, if you guys want me to cover any other indices, please shout out. Yeah, let me go to the DAX right now. Okay. Now, and during the live webinar, if you get any questions, please shout out. Anything that you want to, any charts that you want to me to cover, yeah, feel free to just type in the question box. Okay, so DAX daily chart. Okay, what I like about the DAX is that it seems that the momentum you can see that it's forming a series of high lows here, supported by the trend line. You see that? So, but the very strong resistance, which I mentioned 2 weeks ago, is around the 10.6 to 10.7 level, somewhere here. These two lines I drew here. So, if you go back to a heightened time frame, the weekly chart, okay, you can see that it's poised for some kind of break. This is the first level of resistance. The next level is around the 11,000 or so. Okay, but it looks quite bullish because you can see that it was consolidating this little wedge chart pattern. It broke up when it broke past the 10,200 level, and right now it seems like you want to push further to the upside. Yeah. Now, if you go back to the daily chart, you can see that it's consolidating. See the resistance here? Okay, and the key level to look out for is around 10.6, 10.7, because if it breaks, high chance we are going 10.8 and then 11,000. Right, so I'm waiting for a breakout on the DAX, and I'm going to target this level here. Okay, and a breakout, what you're looking at to enter is basically you want to, hold on, let me just change this. Okay, you are looking at this little chart pattern here. You want to break out, pull back, and then you take a position to the upside. Okay, what you want to see is basically a nice green candle breaking out here. Okay, a little pullback, and then you take a long position, and then hopefully it goes up to at least this level here. That's a trade plan for DAX. If there's no breakout here, obviously there's no trade. Yep. But I mean, you got to be patient. You got to be patient. And some clients like was asking me is that what if it breaks out and doesn't pull back and things like that? What if it just goes straight up like that? What happens? Then there's no trade. Okay, because for me the trade, the most important part of trading is always the risk. And if it just shoots straight up, if it just shoots straight up and it doesn't pull back to give me any entry and I can't manage the stops, I rather leave the trade, because there's so many other opportunities in markets. Okay, so let's go back here. Okay, so it seems like it wants to push higher. Alright, a series of higher lows forming. Momentum is building up towards the upside, but it needs to break this resistance first. Okay, just put alarms above 10,650. So, and then let's watch what happens in the coming few days. Okay, but I think a break is about to happen. Yeah, so that's the DAX for you. Same thing for the CAC. The CAC is the Funds 40. Let's just do a quick one because it looks the same. You can see that the Funds 40, there's a very key level that we are at the moment, which is at around the 4530 level, as well as the 4560 level. So these two lines here. Okay, and what you want again, if you want to see a break to the upside before trying to take it up. Okay, but the good signs is that it's forming a couple of higher lows. Okay, and higher lows are basically signs that the market is supported and there's momentum building for a breakout to the upside. Okay, so you just look at the Funds 40 as well, quite similar to the DAX for upside breakout. Okay, so that's the CAC. Okay, any other indices? Now I'll move on to the Asia side of things. Any other indices on the Western world? And now I'll move on to Hang Seng and Nikkei and things like that. Okay, let me go to the Asia side. Let's start with the Hang Seng. Okay, so this is the Hang Seng. Now, daily chart. You can see that it was on uptrend for quite some time, but now momentum is waned and we are practically sideways. Support level 23,000, resistance around 24,000. Very simple stuff. This is the daily chart. If you look at the weekly chart, you can see the weekly chart is still towards the upside. Alright, it's still towards the upside. Daily chart, however, is a bit more consolidating. Alright, so you see how different time frames can mean different things. Yep, so I'm not surprised that we're still consolidating the daily chart and we might move back to the top of the resistance here before we see what happens. Okay, but if it breaks this 23,000 level, right, high chance we're going to another level of support. Okay, so if I go back, this is a daily chart, yeah. Now if I go back to the weekly chart, okay, you see this level here? Resistance, resistance, which line? Support, support, resistance, resistance, potential support. This level here is around the 22,500 level. So the daily chart breaks the support. I'm not surprised if we come back here, the support level first. Okay, it does not mean that the weekly chart is bearish. No, the weekly chart is just retracing. But on the daily chart, it's actually turning bearish if that happens. Okay, because when you break, let me just adjust this, sorry. Okay, because when you break this level here, alright, this is actually a new lower low, and the daily chart be a downtrend. And 22,500 support is somewhere here. So you got to be smart. But you got to look at different time frame. And what most clients do is that they see the thing coming down, which is okay, which is correct. It broke a new lower low, broke a support, and they tend to wait. And where they take the short is somewhere here, which is absolutely the worst place already because it's hitting another level of support. It's hitting a higher term time frame support, which is a weekly chart. Alright, so always know where you're entering, on whether you're against the bulls or the bears at a particular time frame. So for this case, if you try to short at this level here, near 22.5, you're practically shorting your support. Okay, what you want is you are shorting this immediate support. Okay, and your target should be around 22.5. That's what you want. Okay, but daily chart is consolidating. Let's take a look at the 4-hour chart. Okay, so you can see the 4-hour chart tells a very different story, isn't it? It actually doesn't look as bearish as the daily or weekly, but look at the 4-hour chart. You can see that it is consolidating. It came down, yes. It made a total reversal up, came down again, high, low, and pushing upwards. Okay, so 4-hour chart, nothing much to infer because it is consolidating. So I suggest for Hang Seng, use the daily chart as your guide. Okay, use this range bound from 23,000 to 24,000 as your guide. I so you got to be very clear on which time frame you're trading, because if I'm a daily chart trader, I just say that okay, it's going to be sideways, I must stay away. However, if I'm trading a weekly chart, I might say that haha, finally, you know, it was very bullish, right? Couple of weeks couldn't break this 24,000 level, and I say finally it's making a decent pullback, either maybe to the 22,500 level or 23,000 level before I'm beginning to take it up again. Okay, but you need to have a trade plan and you need to know which time frame you are trading. Okay, I always repeat that. Okay, so that's Hang Seng for you. Let me move on to Nikkei. So you can see the Nikkei looks very consolidating as well. Alright, quite similar looking as the DAX and the CAC, just not show you. Key resistance level is anywhere between 17,000 to 17,150. Okay, similar to the DAX and the CAT, pay attention to this one because you can see that. Okay, there's a bit of support here, so higher low, higher low. Okay, and it can mean that it might break up. So higher low means the momentum is going towards upside, and it might break this 17,000 level, and then we're not surprised if we see 17.4, 75, or things like that. Okay, this is Nikkei for you. It has been consolidating for some time. Let me go to the weekly chart. Yep. So you can see that it's a very clear possible change of trend of weekly chart based on what it draws for you, higher low. Okay, for uptrend to continue, a higher low needs to precede a high high. And this is the new high that it needs to break. If it breaks this high, right, chances are it's going all the way up. And this high is around the, hold on. Alright, so just be, so you see the weekly chart, right? I want to show you is basically this level of resistance here, and a level of resistance here. Okay, so you can break the 17,000 convincingly, right? 18,000 is possible. 18,000 is definitely possible. But the daily chart gives you a bit more perspective. You can see the touches here is very strong. So wait for it to break out above these two lines first before trying to jump into the long side. Alright, so that's a Hang Seng for you. Any other indices that you want me to cover? Oh, John, thanks. Will you be sharing on good trades you did last week or year for EA? Last week, what did I cover? I can't remember, no, John. I mean, I did a little seminar during the lunchtime seminar in the office, and I was very bearish pound. And then what happened? I can't remember. Oh yeah, and then Friday, the 6% flash crash came. I mean, I don't really factor in the flash crash as part of my trading, even if I made profit from it, because it's luck, isn't it? Nobody know about when the flash crash is going to happen. But what I can tell you is that all the pound pairs were really bearish at that week anyway. Okay, the pound pairs were really bearish. So the flash crash, of course, exaggerated the whole thing. But if you follow the trend, you shouldn't be shouldn't be affected much, especially for your longer term trend. Yeah, that's why it's called a flash crash, correct. But one thing that you might want to think about as a retail trader, since John brought out the issue of the flash crash, right? One thing you want to think about as a retail trader is guaranteed stops. Basically, what happened last or 2 weeks ago on a Friday morning is, I mean, of course, you can point figures and a lot of things, but I would say that a lot of these robot trading, algorithm tradings have exaggerated a lot of the movements sometimes, or it can exaggerate a lot of movements. And there's no better way to show how important guaranteed stops can be because of the slippage. Okay, so it is a market phenomenon, this flash crash kind of thing. I think it happens like the last time was a year ago or so, but if it could happen more frequency, right? Then you've got to be a bit careful as a retail trader. Yep. Not really product selling, John. I mean, it's more of as a retail trader. I mean, even for myself, all right. I'm thinking like, you can imagine that. I mean, you work so hard and you're making good profits for the past few months, and then once incident like that because of a slippage, all your profits disappear. So, guaranteed stop is something you really want to consider, and IG has that risk management tool. The only premium that you pay is 0.8 pips, and you don't have to pay it unless the stop is triggered. Okay, only 0.8 pips. And what a guaranteed stop does is that whenever there's a big market movement like that, if your guaranteed stop loss is at $1, if the price goes through it, the $1 is guaranteed, right? There'll be no slippage. All right, so just something that you can, I digress a bit because I think that it's good, or it's good to be aware that we have guaranteed stops so that you can incorporate it in your trading. Okay, so again, Nikkei really momentum upside. If it looks very similar to CAC and the DAX, you can see that higher lows forming. 17,000 is the resistance. If it breaks, okay, I'm looking towards this level at least. Sorry about that. Okay, let's have a look at the weekly charts. That was a daily chart. Okay, so if it breaks, you can roughly look around the 17,500 or so. Possible, but pay attention to Nikkei. It's been sideways for so long, so many weeks, so right now it seems to be pushing to the upside. Okay, so that's a Nikkei for you. Now, what else? Any other indices that you want me to cover before we move on to FX? Yep, if you guys have any other indices that you want me to cover, now I'll move on to FX. Okay, if there's no other question, I'm going to move on. I take a 10-second pause and then I'm going to start on the euro dollar pair.